Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the weekend of February 5th, 2014, the mutual funds industry saw relatively typical flows this week, while at the same time ETFs saw anything but a typical week. Let's go into our macro groups and see where those totals shaped up for mutual funds. Starting off at the top, equity funds and we'll call it taxable bond funds also had inflows of about $1.3 to $1.5 billion. Again, lighter activity, but not too far out of line. Muni bond funds unfortunately had their first outflow. They saw about $244 million withdrawn from them. And money market funds had inflows of about $5.8 billion. Well, as I said, it was a fairly typical week for mutual funds. Equity mutual funds had about $1.5 billion in inflows. Overall, the economic news was pretty sedate. We did see over this past week the unemployment numbers start to trickle lower, although the jobs report was somewhat disappointing to others. We also saw ISM figures come in lower than expected, which also caused a little bit of pain in the market. So let's take a look at equity numbers here. Again, the market was down about 1.4% for the week, marking the second week now of downside returns. The risk-off trade was definitely in favor this week. On other areas for equity mutual funds, we didn't see that evolve quite so much. International Multi-Cap Core continued to be a strong draw this week. They took in about $764 million. Long-short funds also had another good week, $413 million. A lot of this is very product-driven. That International Multi-Cap Core that's getting so much attention is none other than the Oakmark International. We also saw good flows this week from the MFS International Value Fund, also a multi-cap core. It had about $400 million in inflows. And then on the long-short side, again, that Market Field Fund continues to dominate its category. Well, if we turn our attention to ETFs, the equity ETF market had a lot of interesting news this week. Outflows as far as the eye could see when you look at SPY, EEM, and one more, the mid-cap core. So what happened here? Well, it turns out that Good Harbor Financial out of Chicago is a mutual fund manager as well as a separate account manager, and they like to trade a lot of ETFs at the beginning of the month. We happen to capture the first trading day of February in this data, which is why equity ETF flows look so far out of line compared to what happened with mutual funds. We'll see a lot more information coming up in our taxable bond fund area. In all, they made about $7 billion in trades in one day, and people are starting to get used to this, starting to shake up our flows numbers a bit. Just something to be aware of whenever we talk about weekly flows that include the first trading day of the month. We'll get into more details later on. The next group we'll take a look at is taxable mutual funds. They had inflows this week of about $1.3 billion. The flows into this group are slowing. They started off at a very torrid pace, $4 billion a week. We're now down to under $1.5 billion. I think investors are starting to get concerned that although interest rates are moving down, this wasn't the bet they had in mind, so it might just be a pause before people start to consider that maybe taxable bond funds will be okay this year. Alternative credit focus funds were the leaders this week for inflows. They saw about $962 million flow their way. Again, a very product-driven decision. Now, here's the interesting part this week, the fixed income ETFs. There were two in particular that came out of nowhere. Again, Good Harbor bought big positions in SHY and IEI, the 1 to 3 and 3 to 7 year treasuries. I think in Sympathy IEF, which is the 7 to 10 year, also drew some interest, but not nearly as much. At the same time, high yield ETFs had outflows, so a lot of this very interesting, huge inflow into taxable bond ETFs was all the result of Good Harbor Financial just shaking up the portfolio at the beginning of the month. Next group to turn our attention to is municipal debt funds. Again, they had an outflow this week, their first outflow in the last 4 weeks. Performance is still up. Things still look positive for municipal bond funds. I get the impression that a number of advisors out there saw the headlines, saw that S&P had downgraded Puerto Rico to junk bond status. Again, they're the only one of the 3 major ones to do so. It's expected the other 2 will fall in line shortly, but the market has already discounted Puerto Rico's credit as a junk status a long time now, so this shouldn't have been much of a surprise to anyone out there. The last group to take a look at is money market funds. They had about $5.8 billion in inflows. This is relatively light activity for them. Not much of a difference here. Retail investors and institutions alike both put their cash to work this week. $2.5 billion on one side, $3.5 on the other. So overall, not a whole lot of activity or much we can draw out or conclude from this flows data. Well, that'll wrap it up for this week. Again, join us again next week where we'll have some more flows data on mutual funds and ETFs, and we won't have Good Harbor to think about for a while. So thanks for joining us, or check us out online, lipperusfundflows.com. We'll see you next week.